depreciation. Okay, so you come to page 106. Okay, come to page 106. We begin on this new topic. And last week, I remember I assigned you a question to do as homework. And the homework is this one. This is the one. Okay, so 15 of September this year. Okay, and I'm not going to discuss this question because I have created a video for this, which where I will, in that video I will discuss as to how you complete this question. Okay, so let me send you the link. Okay, for this question. So ensure that you attempt first before you look at that video. Okay, for the full solution step by step. Okay, and now let me send you. Okay, I'm going to send it to the chat box there. One of you solve the question and then you send me your answer. And then I already sent you the video link. Let me see which one. Yeah. Okay, it is this one. Okay, so ensure that you copy and paste this link. Okay, copy and paste this link. And you can look at that video to do correction accordingly. Okay. Yeah, that's it. Now we move on to a new topic. Depreciation. Okay, now some of you should have learned this topic with your school, and for some of you, it's a new topic to you. Okay, so I'm going to guide you through from scratch. Okay, come to page 107. Come to page 107. Let's understand what is depreciation. So depreciation, before I tell you what it is exactly, you fill up the blanks here first. Is an expense. Is an expense. So where does expense appear? You learn it from the part 2 there. You learn it from the part 2 that an expense should appear in the income statement. So you write income statement. Agree, right? Okay. An expense should appear in the income statement. In the income statement, you have a big group of incomes, a big group of expenses. If you have more income than expenses, then you get profit for the year. If you have more expenses than income, then you get loss for the year, right? Okay. Now, next thing you have to understand depreciation is that it is related to NCA, non-current asset. It's related to non-current asset. Okay. And when you buy an NCA, the price you paid to buy it is known as cost. Okay, the price you paid to buy the NCA is known as cost. So you can look at this line yourself. Price at which we originally bought the NCA. Okay, the price you paid to buy the NCA. Let's say you bought a furniture. Let's say you bought a furniture for 10,000. Okay, so maybe you run a restaurant. So you need a lot of tables and chairs. So you have bought a total of $10,000 worth of furniture. Okay. So do you agree this furniture can help us generate income? Right? This furniture can help us generate income. Without the furniture, you cannot run your restaurant. Okay, assume that is a dine-in restaurant. Okay, don't tell me it's online restaurant. We don't need tables and chairs. Okay, assume that this is a dine-in restaurant. You need tables and chairs, a lot of them. So the furniture you bought is worth $10,000 in total. And you agree that furniture helps us to generate income, right? It helps us to generate income for the restaurant. And according to a principle known as accruals or matching principle, this principle tells us that we must match income against expenses. We must match income against expenses. That's what matching principle tells us. When you prepare income statement, we must match income against expenses. Since the furniture that you bought can help us generate income, we must also find an associated expense to match against that income. Don't you think so? Logical, right? Okay. So the reason this topic exists is due to the existence of this principle, matching of accrual principle. Okay, because they ask us to compare expenses against income. Okay, so since NCA helps us generate income, we must find the associated expense for this furniture. And let's see how to find it. So just now I said that furniture is worth $10,000. That is the cost. Okay, you bought it for $10,000. So $10,000 is the cost. Assume that you expect to use the furniture for maybe 5 years. After that, you think that they would be too old to be continued to be used. You intend to replace them after every 5 years. So you expect to use it for 5 years. This is known as useful life. Whatever I'm writing here, you write down, okay? Because it would help you to understand better when you revise it yourself. Without these writings, you may get confused what is depreciation. Okay, 5 years is known as the useful life. Okay, this is a technical term, useful life. Expected you expect to use it for 5 years, so 5 years is the useful life. So it means that you see $10,000, right? And you are going to use it for 5 years, right? It means that for each year, you are going to use $2,000 worth of that furniture. Can we say so? Okay, you bought it for 10,000 and you think that you will use it for 5 years. You take the 10,000 divided by 5 is $2,000 per year. So we can say that you are going to use that furniture. That means you use you are going to use $2,000 portion of that furniture each year. Okay, that means every year you use $2,000 worth of that furniture. I know is you cannot see that spending. You cannot see that usage of the furniture, right? You cannot see how much is exactly 2,000, right? Okay, so we just it's just a rough estimation. Okay, so you take 10,000 divided by 5, you get 2,000 per year. Okay, that means every year you would use $2,000 worth of the furniture you bought. Logical, yeah? What is this known as? This is the depreciation. Okay, this is known as the depreciation. Okay, which links to the name of the topic, depreciation. Okay, so make sure you have this. Now, let's look at the definition of depreciation. Okay, the purpose of doing depreciation is written here. Purpose, okay, to allocate means spread. Okay, allocate means the same as spread. The cost of an NCA to the accounting years in which they are used. Okay, this is what I exactly did just now. Just now, I took the cost of the furniture, which is 10,000. I spread it to those years in which they are used, which is 5 years. The figure that I used just now, the 5 years. Okay, I spread the 10,000 to all those 5 years equally. Okay, so that is depreciation. That's depreciation. Allocate the cost of an NCA to the accounting years in which they are used to match against the income the NCA helps generate. Okay, consistent with the matching principle. Matching principle tells us we have to match income against expenses in the income statement. Okay, as simple as that. Depreciation is the allocation of the cost of the NCA to all those years in which you use the NCA. Simple. Okay, but later you are going to see a few more methods of calculating depreciation. It is not always taking the cost and divide it by the expected useful life. Okay, later you will see some more formulas. Okay, so this is the introduction about depreciation, and you can see that there are 2 more accounting principles here, right? Prudence principle, consistency principle, right? These 2 are extra accounting principles that are linked to depreciation. For this one, we look at this much later. Okay, for now, you just understand matching principle is linked to depreciation. It's about matching incomes against expenses. Okay, expenses here is the depreciation. Okay, now let's look at one question. Okay, based on this, you can answer one question already. You go to the back a few pages later. You come to page number 114. Come to page number 114. 114, yeah. Then you answer two questions for me. Question 22 and question 26. Okay, you begin. Once you have decided what is your choice for these two questions, then you tell me in the chat box, then I tell you the answer. Okay, you may begin. I give you 1.5 minutes time. Everyone participate, yeah. Okay, it's okay to be wrong, but don't be too wrong. Okay, choosing the answer that is very much different. Okay, from what I thought about so just now. Okay, 1.5 minutes. 22 and 26. I wait for you. Okay, one of you is done. Good. Okay, second one of you is done. Good. Okay, half a minute left. A few of you have done. 1, 2, 3, 4, 5. Okay, two more of you have not done. Okay, time's up. The rest of the two, what are your answers? Okay, I have to discuss. Let's see. You may have a question for 22. Okay, just now in the list of accounting principles there on the first page of the notes, you can see that you have consistency there, right? And then accrual principle is the one that I mentioned at the beginning, right? So you could be wondering which one you should choose. You should choose the A, because that's the main one. That's the most accurate one. Okay, so choose the A. Between A and B, choose the A. Okay, well done. Now, 26, very easy. Answer is D. Okay, all of you did correctly, the 5 of you. Okay, now let's continue. Let's get back to the notes. Nothing much else you can do here. Okay, let's get back to the notes. Okay, just a bit of introduction about depreciation. Okay, now next page. Sorry, on the same page, okay, 107. Just now we talked about why we calculate depreciation, right? It is to match the expense against the income to comply with the accruals principle. Now let's talk about when. Okay, let's talk about when. When do you have to do so? When do you have to calculate depreciation? Okay, and let's see. When we calculate depreciation, okay, throughout the plan, here is about the terminology. Okay, you have to understand the terminology. When we calculate depreciation, there's another term for this. Okay, we are said to be charging depreciation. Okay, it means the same thing. Okay, calculate depreciation means the same as charging depreciation. The reason they use the word charge is because whenever you see the word charge, it means it's an expense. Okay, charging depreciation means the same as calculate depreciation. business must charge depreciation. Okay, now here it talks about when you should charge depreciation. At the year end, you know what is that, right? It is the last day of any month. You can see the question, then you know the year end immediately. Okay, in the previous topic, we talked a lot about year end, right? Year end means the closing balance. Okay, so at the year end, we calculate depreciation. Okay, every year end. For all is NCA. Okay, so it's telling you all the NCA that you have, all the NCA you have in your business, you must calculate depreciation for them. From the day they were bought until the day they are sold or disposed of. What does it mean? This is known as ownership period. As long as you still own it, then you charge depreciation. Very simple. As long as you still own it, then you charge depreciation. Okay, there is one NCA that you don't have to charge depreciation. It is known as land. For land, you don't have to charge depreciation. And the reason is this. You know, in certain countries, land is expensive, right? For example, in HK, in Hong Kong, the land is very, very expensive. To buy a house there is very expensive. Okay, if you want to buy the landed one, it's even more expensive. If you have a lot of money in Malaysia, maybe you can just buy a condo in the HK, right? Okay, I'm not sure you have heard of that. So reason is this: land doesn't disappear easily. It doesn't disappear easily, right? How can a land disappear? Maybe through disaster, okay, tsunami, okay, then land can disappear. But generally, they don't disappear. So we can say that once you have bought a piece of land, it can help you to generate income forever. It can help you to generate income forever. Okay, it can help you to generate income forever. And since the income that you can generate from using the land is forever, that means you don't have to match it against expense, because once you have bought it, you can use it forever. Okay, so that's the reason. And you may also tell that land doesn't easily drop in value as the reason. Okay, so far I've not seen questions that ask you why you don't have to charge depreciation for land, but it is possible for it to come up. Okay, they may ask you why we don't charge depreciation for land, because it can help us generate income forever. It's like free, okay, free forever once you have bought it. It's free forever once you have bought it. Okay, now here's a summary. Depreciate a furniture. Furniture is an NCA, right? It's also known as charging depreciation for the furniture. It's also known as creating a depreciation for the furniture, or you call this as calculating depreciation. Okay, so this is for you to understand the questions when they use any of the terms here. Charge depreciation. Charge depreciation is also known as calculate depreciation. It's also known as charge depreciation for the NCA. Okay, now remember, as long as you still own the NCA, you must still charge depreciation at every year end. Okay, you must charge depreciation at every year end during the ownership period. Okay, now let's see the next page about calculation. There are 3 methods in total for you to calculate depreciation. It's not just as simple as taking the cost divided by useful life. Okay, earlier I talked about useful life, right? 3 methods. Write down straight line method. Synonym you must also know. Synonym is known as equal installment method. Next column, you write synonym is diminishing method. Okay, diminishing method. For those of you who have learned this topic with your school, then this term should not sound strange to you, okay? You should have been introduced to these terms: straight line method, reducing balance method, okay? Revaluation method is the last one. Revaluation method. Among the three, the easiest one is the one at the rightmost, revaluation method. Okay, revaluation method. So I'm going to guide you on using this method in calculating the depreciation near the end of this topic. Okay, near the end of this topic, I will teach you. Okay, now we focus on the first two methods first, the straight line method and the reducing balance method. Before we go on and learn their formulas, let's see how these three methods of calculation are different. In what situation, which method should be used? So you can see the next row talks about suitability. Okay, there are many types of NCA, right? Certain NCA you should use straight line method. Some other NCA you use reducing balance method, and some NCA you use revaluation method. It depends on what factors. Okay, now let's see. The factors are here. It depends on the efficiency of that NCA that you are looking at. Efficiency. For NCA that can give you the same level of efficiency each year, we would use straight line method. Good example is wooden chairs. What is meant by efficiency here? Usefulness level of usefulness. Level of usefulness. You can also look at this. You can also look at this by thinking about how frequently does it break down. Okay, so for example, wooden chairs. Why I quote this as the example? Because if you have seen some wooden furniture, they last for a long time, right? They last for decades, right? Sometimes even. So that's why every year when you sit on a chair, it still gives you the same level of comfort. Okay, it doesn't break down, and it seems that it can last forever. That's why we can use straight line method. Yeah. Now, what about reducing balance method? Reducing balance method is suitable for NCA that drops in efficiency each year. For NCA that would use this method, I can give you many examples. First one, machinery. You think of machines. Do you think machines can break down easily? So what kind of machine I'm talking about? Maybe I'm talking about machines that you use in the factory to make things. Okay. So once in a while, you have to keep doing repairs and maintenance, right? The older is a machinery, the more maintenance you have to do, right? So that's why we say that it keeps dropping in efficiency. It keeps giving you lower comfort each year, okay? Because you have to do more repairs and it becomes older. Agree? Motor vehicles are also NCA. Any transportation on the road, lorries, vans, cars, motorcycles, all these are motor vehicles. So again, as it gets older, the more repairs you have to do and maintenance you have to do on it, upon it. So that's why we say that it drops in efficiency. Okay, so for this NCA, we use reducing balance method. Last one, revaluation method is meant for NCA that are cheap in value individually. Small in value means cheap. Okay? Small in value means cheap. And this kind of NCA are also great in quantities. Okay, so what are the types of NCA that are cheap individually and great in quantities? Here are some examples. Loose tools, gardening tools, and kitchen utensils. Let's start with loose tools. You may have a question, what is meant by loose tools? Is it tools that are loose? Not exactly so, not literally. I show you through picture online. Loose tools. You must not try to search anything online about accounting facts. You look at the first sentence. Loose tools are the current assets of an organization. First line already wrong. You see, organization is also written wrongly. Organization. Okay, so honestly, don't try to search anything online about accounting facts. Most of them are wrong. Okay, try to look at the facts from official textbooks. They are more reliable. Okay, those tools are not current assets. Those tools are NCA. Okay, you see, first line is already wrong. Now, you can look at the pictures though. Pictures are correct. Okay, some examples of loose tools. Here are the loose tools. In what businesses do you use loose tools? Electricians, plumbers, who else? Mechanics, yeah, mechanics. Okay, so they use those tools. These are those tools. Why are they NCA? Why are they NCA? So to understand why they are NCA, you look at the definition of NCA. Assets owned by a business for use in the business for at least 12 months. Okay. Does it satisfy the definition of NCA, those tools? Answer is yes. You try to imagine that you are an electrician. Okay, you go from houses to repair or maintain their electricity of the house. Do you think that you would buy this set of things every year? You would buy a new set of these things every year? Of course, no. If you still can use them for, of course, you continue to use, right? That's why these are those tools. You can use them for at least a year. Okay, unless one day you have lost any of them, then only you buy a new one, right? Okay, all these things can last for a long time. Okay, more than a year, of course. That's why they are NCA. Okay, so okay, sorry, I should look at the picture again. So you try to imagine, you try to think, are these things individually expensive? I don't think so. This just cost a few dollars, right? Okay, so individually these are cheap and they are great in quantities. Agree, right? Okay, so this is the example. Now, another example is kitchen utensils. In what businesses do you need to have kitchen utensils? Restaurants. Are they cheap individually? Okay, I know it's quite subjective. If you buy from DIY, Mr. DIY, okay, then they are cheap. If you buy from 20-cent store, then they are cheap. If you buy those from Isetan, you buy from Isetan, then probably they are expensive. But generally, looking at the average prices, okay, they should be cheap individually and they are also great in quantities, okay, these things. So once again, satisfy the characteristics. Okay, last one, gardening tools. Some businesses, they plant trees and flowers for people to buy. Not sure if you have been to those places before, okay? They sell those trees and plants to the people. So these are some examples of NCA, which are cheap in value and also great in quantities. For this NCA, you use revaluation method. A common question that would be asked in the exam is, why do you use revaluation method for this kind of NCA? And we are going to see those questions soon. First thing you must mention is they are cheap in value individually. Okay, that's the first reason we are going to write. Then we also say that they are great in quantities. Okay, these two are the answers. If they ask you why you should use revaluation method for this NCA. For now, you may not understand why these are the reasons yet. But after you have looked through the whole topic, depreciation, then you will understand better why you should use revaluation method for this NCA. Okay, so now let's see those questions. Let's see those questions that I mentioned. You go to page number here, 118, page 118. All these are past exam questions, okay? Very relevant to your exam. C. Question C. Suggest one reason why the loose tools are revalued at the end of each financial year rather than by using the straight line or reducing balance method. Basically, it's asking you why you should use revaluation method. How do I know? Because it says revalue. When you see the word revalue, it means that they are using revaluation method. Okay, now let's write the answers together. It's a 1-mark question, so just one line will do. Okay, you follow me and write. Okay, this is the answer. Okay, I don't have to talk about they are great in quantities. Okay, because it's just a 1-mark question here. When you have written, okay, then you wait. I give you about 10 more seconds, okay? Those who are still writing, write faster. Then I show you one more question. I'll show you one more question. Okay, done, yeah. Okay, now next. Okay, come to page number 122, 122, 122, question 3B, 122, question 3B. Suggest two reasons why the straight line method, in bracket, they wrote the synonym, would not be a suitable method of depreciation to apply to the hand tools used in the Jamil's factory. Hand tools here means the same as those tools. Hand tools here means the same as those tools. Can see? Hand tools. Okay, so basically answers to be written here are the same as the one that you wrote just now earlier. You're right. Second reason, you're right. Okay, once you have written, you let me know in the chat box there. Then we get back to the notes. Okay, then we get back to the notes. Okay, should have written, yeah. Now we look at the A, 3A. Name one method Jamil could use to depreciate his NCA. Okay, one other method, yeah, one other method. So what answer should you not write? Look at the sentence given at the top here. Start a business on 1st January 2014. Considered using straight line method. So can you write straight line method in the A? Answer is no. Okay, don't write straight line method. You can write the other two methods. You can write reducing balance method, or you write revaluation method. Okay. So just one mark. Okay, right one will do. Now let's see other questions. You go to page 117, 117. Okay, page 117. We are going to do the 4A. State two methods used to calculate depreciation of a known current asset. Okay, simply write any two methods. Okay, so these are easy questions. Don't leave it blank. Okay, don't leave it blank. So go on and write straight line method. Secondly, reducing balance method. If you want to write the third one, the revaluation method, you go on and write revaluation method. Okay, so I'm just going to write this too. Now, see the note section. Go back to the note section. Okay, let's learn a few more things before we go on to try questions again. Okay, come back to this table, page 108, page 108. Okay, now we have understood a bit about each and every method here. Okay, about the factors you should consider when you are choosing which method to calculate depreciation. And don't worry, in the exam, most likely they will not ask you to use, they will not ask you to choose. They will not ask you to choose which method to use. But in certain questions you will see, okay, but seldom, very seldom they will ask you which method you should use. Don't worry. Next row, you see two charts here. Can see two graphs here. Here you write years. You write years. Then for the y-axis, you write depreciation. You write depreciation. Through these two graphs, you can understand the patterns of numbers that you would get using the straight line and reducing balance method. And here you write year 1, year 2, year 3, year 1, year 2, year 3. Okay, so what can you observe here? Remember, when should we calculate depreciation? During the ownership period at the year end, right? And every year end during the ownership period. So for straight line method, every year's depreciation is the same. For reducing balance method, every next year it becomes lower. Every next year it becomes lower. Is a decreasing pattern, a pattern of decreasing every year. Okay. And there's no pattern for the revaluation method, so I don't have a graph there. Okay. There's no graph for the revaluation method. Every year is different. Now, next we are going to learn the formula. In accounting subject, there's no formula given. Unlike in mathematics or NMaths, you would be given the formula sheet on the first page, right? The first few pages. But for accounting, no formula sheet. We are going to learn straight line method first. Okay, learn the formulas for straight line method. You write with me the first formula. Cost times percentage. This is the formula to calculate depreciation if you are not given useful life. Can see it's written here. If you are not given useful life in the exam question, then you take cost times percentage. What does the percentage mean? Okay, write down. Percentage means the depreciation rate. Okay, a new term to you here, depreciation rate. Okay, percentage means the depreciation rate. Okay, and then on another hand, if you are given useful life, the formula that you would use would be different. The formula that you would use would be different. It is this. You write on top, you write cost is a fraction. Is a fraction. On top of the fraction, you have cost minus accumulated depreciation. Cost minus accumulated depreciation. A new term once again. I will tell you what it means later. Okay, accumulated depreciation divided by useful life. Wait. Okay, sorry, I made a mistake here. You erase it. Sorry, not accumulated depreciation. Residual value. You write it. Residual value divided by useful life. Okay, you understand what is cost, right? On the first page, we talk about cost. And you have also understood what is useful life, right? On the first page, we also talk about useful life. Now, what is meant by residual value? Look at the definition given below. Residual value is also known as strip value, synonym, okay? It is the expected selling price of the NCA at the end of its useful life. Okay, let's read again. Expected selling price of the NCA at the end of its useful life. Imagine that for a furniture that you bought, you expect that you would sell it for maybe $500 when it is near the end of the useful life. That means assume that the useful life is 5 years. Useful life is what? Useful life means it is the estimated number of years you would use the NCA. Okay, for example, you bought a furniture today and you expect that you would use it for 5 years. So the 5 is useful life. Okay, so residual value means you are trying to estimate at the end of the 5 years how much you can still sell it for, how much you can still sell the NCA for. Okay, so that's expected selling price of the NCA at the end of useful life. So you see, it's quite logical. If you bought the furniture for 50,000 earlier, and if you still can sell it for 500 after 5 years, it means that throughout the 5 years, you have used 400. You have used a total of $49,500 worth of that furniture. This is the amount used throughout the 5 years. Okay, so let me repeat. Yeah, assume that you bought a furniture for 50,000. You bought a furniture for 50,000, and you expect that at the end of the useful life, it is still worth $500. People want to buy it for $500 after 5 years. So you do the deduction. This amount logically represents the amount you have used throughout the 5 years. Okay, so you take this, divide it by useful life, then you would get the amount used each year. Amount used each year. Okay, so this formula is quite logical. Okay, now so let me conclude about the formulas you should use for straight line method. When the question asks you to use straight line method, then you have to decide which formula to use. You have two formulas here, cost times percentage or cost minus residual value divided by useful life. Which one you should use? It depends on whether you have useful life or not. If you don't have useful life, you use this formula. If you are given useful life, then you use this formula. Get what I mean? Okay. Now I let you apply this. I let you try to apply this to a question. On the same page, look at unagi question. Question on unagi. You calculate for me these three figures. Okay. You calculate for me these three figures. Then you tell me in the chat box there. I give you a total of 3 minutes. Okay, 3 minutes. First time you are applying, so I give you more time. Okay, I wait for your answer. Okay, 3 minutes. It's about the straight line method. Okay, straight line method, because you have only learned straight line method. This is straight line method. Okay, 3 minutes starts now. Okay, one of you has calculated. Okay, the rest of you. Oh, very easy. Just apply the formula. Okay, don't worry about getting it wrong. They ask you to use straight line method, right? Okay, then next step will be to see whether you have been given useful life or not. Then you determine which formula to use. Then apply the formula, then you can calculate. Very easy. Okay, you try. Okay, don't have to worry about getting wrong. Don't worry. If you have done it wrong, it's even better because when you learn from it after you have done it wrong, then you will remember even forever. Yeah, so 1 minute left. In accounting, never always think that all the info given must be used. Okay, in many of the accounting exam questions, some figures don't need to be used. Okay, so you need to know what you need to achieve. You need to know what you need to achieve. Then you take what you need. Then you achieve that goal. Okay, never think that you have to use all the figure. And then earlier I also talked about the graph. The graph tells you every year's depreciation should be the same, right? The graph can see. Remember? Okay. Okay. Still have a bit of time. Okay. Time's up. It's okay to be wrong. Okay. Think about those great scientists. How often are they wrong? They are wrong maybe 99% of the time. They just have to got it right one time, then they are famous forever, right? It's okay to be wrong. Okay, now let's see. Unagi bought a furniture for $50,000. What is this known as? Cost. Okay, every word's meaning must know. Okay, this is cost. Price you paid to buy the NCA. Residual value estimated to be 4,000. Okay, residual value estimated to be 4,000. Unagi intends to use straight line method. Okay, just now I told you, after you know that you should use straight line method, next step will be to see whether you are given useful life or not, right? Okay, are you given useful life? Let's see. Calculate the depreciation for the first 3 years of ownership. This is not useful life because it doesn't tell you that Unagi intends to use it for 3 years, right? It doesn't tell you. It's just telling you to calculate for the first 3 years. Okay, so throughout this paragraph, no useful life, which formula to use? Cost times percentage, right? Okay, based on what I talked about, cost times percentage is the formula you should use. So cost is how much? Cost is how much? 50,000. What is the percentage? 5%. Equal? Then you can get the answer, right? Okay. Don't worry about getting it wrong. Okay. 2005. Okay. One of you did it correctly. Well done. Okay. Good, Megan. 2005. Second year, what would it be? Remember the graph? So 2005. Third year, 2005. Simple. Yeah. This is one of the simplest calculation. Okay. But seeing that this is the first time you do it, then it's okay. Okay. It's forgivable. Okay. So good try. Good try. Okay. Those who have given me answer. At least you try. Okay. It's okay to be wrong. And conclusion is, okay, so one of you asked me whether we have to minus the residual value. Does my formula have residual value? No, my formula doesn't have residual value. Just as simple as cost times percentage. Only if I use the other formula, then I have residual value. But what is the condition for using the other formula? It depends on whether you have been given useful life or not. If you have been given useful life, then only you use this formula. Okay, but unfortunately you don't have. So residual value is useless here. Residual value is useless here. Okay, don't have to use that. By the way, the leftmost of the table, help me to remove this. You don't need this. Okay, don't need this. Yeah, useful life is the number of years you expect to use the NCA that you bought. Okay, the number of years you expect to use the NCA that you bought. But this is not useful life. This 3 is not useful life. It is just telling you to calculate depreciation for the first 3 years. It doesn't tell you that Unagi expect to use it for 3 years. So no useful life is given here. Okay, so cost time percentage. Okay, I let you, all of you try one more time. I hope that more of you would participate, yeah, based on what I mentioned here. Okay, no problem, okay then. Okay, good question. Next page, you try one more. Wasabi. Okay, you calculate for me the year 1, year 2, and year 3 figure. Okay, just do this one, yeah. Next one is meant for the other method. Sashimi is meant for the next method. Okay, now you go on and try. SLM stand for straight line method. This is motor vehicle. Okay, this is motor vehicle. SLM is straight line method. Okay, this time, maybe you need a bit of more time. I think you need a bit more time. I give you 4 minutes this time. Okay, you begin. Once you're done, tell me your answer in the box there. Okay, 3.5 minutes left. Okay, one of you has finished. Okay. You still have time. Okay. Think properly, then only you try to calculate. Okay, second one of you is done. Good. Okay, 1.5 minutes left. Again, remember the graph. Okay. The graph tells you that every year's depreciation should be the same if you use straight line method. Okay. Okay, half a minute left. Okay, 4 of you tried. At least you tried. Good. Okay. I think we can stop the timer now. Okay, good. Most of you got the same answer for this one. Very good. Okay, now let's see. Wasabi bought a motor vehicle for 60,000. Price you paid to buy an NCA is known as cost. This is known as cost, right? Okay. Expected to use the motor vehicle for 5 years. What do you call this 5 years as? Useful life. Okay, useful life, right? Because it says expected to use the motor vehicle for 5 years. Intends to use straight line method at 5% per annum. Okay, now you know that you should use straight line method. Secondly, you have to decide which formula to use, right? It depends on whether you have been given useful life or not, right? Do you have useful life? Yes, I have useful life. Which formula should I use? Cost minus residual value divided by useful life. Cost minus residual value divided by useful life. Okay, let's find these three numbers. Cost is 60,000. Okay, useful life is 5. Do you have residual value throughout the question? Okay, so from this question, I want you to learn that. The residual value can be 0. Residual value can be 0. That means at the end of the useful life, you think that nobody would buy it. Nobody would buy it. That's why residual value is 0. Okay, so when it's not given, it's 0. So answer is 12,000 each year. 12,000 each year. So you see, you have to decide which formula to use first. Okay, you have to see whether you have been given useful life, then you decide accordingly. If you have been given useful life, you use this formula. If you don't have useful life given in the question, you take cost times percentage. But in this question, you have been given useful life. You should not take cost and times the percentage. Okay, I saw that most of you take the cost times the percentage. That's not the formula you should use. Okay, because in this question, you have useful life. Okay, get the idea, yeah? Okay. Don't worry, I will give you a few more questions to practice. Okay. So 12,000 each year. Okay, 12,000 each year. Okay, now let's look at another method. Get back to this table. In the middle column, you write, for this reducing balance method, there is only one formula. You write cost minus accumulated depreciation in bracket times the percentage given in the question. Okay, so this is the formula. There is only one formula for reducing balance method. There's only one formula for reducing balance method. Cost minus accumulated depreciation, then times the percentage. This one you remove it. Okay. Okay. Now, cost, you know what is that, right? Cost means price you paid to buy the NCA. What is accumulated depreciation? Okay, let me explain what is accumulated depreciation. So imagine that you bought an NCA in the first year. Okay, known as call this as year 1, year 2, year 3, year 4. Okay. In the first year, when you are trying to calculate the depreciation for the first year, let me try to think. I think it's better for me to split the formula for you. Okay, you write here, write year 2 onwards. Okay, year 2 onwards, you use this formula. For the year 1, you use another formula, cost times percentage. Okay, so Let me amend it. Yeah, I find that this way is better. Okay, it leads to less misunderstanding. Okay, so just like the straight line method, there are also two formulas for reducing balance method. For the year one means the first year you bought the NCA, the first year you own the NCA. You take the cost times the percentage, then you will get the depreciation. For second year, third year, fourth year, okay, and all other later years, okay, that means from second year onward, you use another formula. Cost minus accumulated depreciation, then you times the percentage. Okay, now I'm going to explain to you what is accumulated depreciation. Yeah, now let's see what is accumulated depreciation. Assume that these are the depreciation amount for the first 4 years. Can see I'm writing at the bottom right corner. Every year's depreciation is 1,000. Assume lah, okay, just assume every year is 1,000. So what is accumulated depreciation? You know what is the meaning of accumulated? Accumulated, it comes from the word accumulate, right? Accumulate, which means collect, right? Okay, gather, it also means gather. Accumulate, collect, gather. Okay, so understandably, you should sum up all the depreciation, right? Agree? Accumulated. Okay, so after you have calculated the depreciation for the first year, it means that your accumulated depreciation will become 1,000. Okay, your accumulated depreciation become 1,000. After you have calculated the depreciation for the second year, which is also 1,000, then your accumulated depreciation will become 2,000 because you have accumulated both the first and second year's depreciation. Now it becomes 2,000. So after you have calculated for the third year, accumulated depreciation will become 3,000. Why? Because you are gathering all the depreciation since the first year you charge it. Fourth year would be 4,000. Understand? Easy? Okay, so that's accumulated depreciation. It would keep increasing each year. Agree? It would keep increasing each year. Yeah, so be careful and pay attention to what I said here. Yeah, it would keep increasing each year for accumulated depreciation. Okay, now you are going to apply these two formula to a simple calculation question again. Okay, remember, reducing balance method, first year, take the cost times percentage. Second year, third year, fourth year, fifth year, all other years, you take the cost minus accumulated depreciation, then you times the same percentage. Okay, remember, accumulated depreciation would keep going up. Okay, now you try to apply this on the next page, sashimi question. This one, okay, you calculate for the first 3 years of depreciation. Okay, once you have calculated, you tell me the amount in the chat box. Okay, you may begin. Once again, don't be afraid to make mistake. Okay, it's all right. I give you 4 minutes also. Okay, 4 minutes also. Okay, you may begin. Okay, first answer all correct. Well done. Okay, now I wait for the rest. Should we? All your answers are lack of 10. I think you used the wrong figure. You should start with 150,000. Okay, Brian, all correct. Well done. Okay, 2 minutes more. The rest of you who are still trying, okay, keep trying. Well done, Caden. Okay, well done. I think most of you are more familiar with this one, I guess. Okay, 1.5 minutes left. Okay, 1 minute left. I wait for 3 more set of answer from 3 more of you. Okay, time is almost up. Now let's discuss. Okay, first year, what is the formula? First and foremost, they ask you to do straight line, reducing balance method, RBM, stand for reducing balance method, right? Okay. First year, what formula should you use? Cost time percentage. Second year and third year, what formula you should use? Cost minus accumulated depreciation, then you times the percentage, right? Okay. So first year, what are the calculations? Simple, easy, 150,000 times 10%. Okay, look carefully at the zero. Okay, there are 4 zeros there. 150,000 times 10%, 15,000 for the first year. Okay, now second year, 150,000 minus, how much have you accumulated so far? 15,000 from the first year, right? So minus 15,000 times the percentage, which is the 10%, times 10%, 13500. Okay, now third year, use the same formula, take the cost. How much is your accumulated depreciation so far? How much is your accumulated depreciation so far? Is the combination of first and second year's depreciation, right? Okay. So 13500 plus 15,000. So you have 28500 here. That's your accumulated depreciation times the same percentage. Then you can get the depreciation for the third year. Okay, so answer is 12150. 12150. Okay, so this time most of you did correctly. Well done. Okay, yeah. Okay. Now this whole topic, doing calculation is the basic thing, most basic things. Okay. Never try to do the calculation wrongly. There are more things to learn for this topic, like how to do the double entries for depreciation, how to draw the T accounts. Okay, many more complex things to do. Okay, so mastering the formulas, knowing how to apply the formulas is just the tips of the iceberg. Okay, it's just the little things for this topic. Now, come back to this page 108. I'm going to give you a synonym for accumulated depreciation. Okay, You see? Do you see this? Accumulated depreciation. It is the same as provision for depreciation. Okay, accumulated depreciation is the same as provision for depreciation. Okay, so this one you need to be aware. Okay, in the exam, most likely that you will see this term provision for depreciation. But to be honest with you, the term that is on the left, accumulated, it sounds more logical because it's understandable, accumulated. But the provision for, it doesn't sound that right. Okay, but that's the term that would appear in the exam. Okay, now let's learn one more term, which is net book value. Okay, net book value. Okay, you help me to cross off these two. You don't need these two. Okay, net book value means, in short, I call this as NBV. In short, I call this as NBV to save time. It is equal to cost minus accumulated depreciation. In fact, this is the first part of the formula. You agree? The first part of the formula, cost minus accumulated depreciation. Okay. So what I can conclude about this? That means this formula can also be known as net book value times the percentage. Okay. For reducing balance method, second year onwards formula, you can also write this as net book value times the percentage. Okay, because cost minus accumulated depreciation is net book value. I know a lot of terms to learn here. It's common. Whenever you learn a new subject, you learn if you are learning the new topics, you will have a set of new terminology to get used to. Okay, so common. Okay. So now that's it for calculation for straight line method and reducing balance method. Now I show you more questions for calculation to let you practice more. Before that, you come to this page 109. 109. You remember or not? Depreciation is an expense, right? Depreciation is an expense, right? So where should you show it? You should show it in the income statement. Okay, where did you learn income statement with me? From the part 2. You learn income statement with me from the part 2. Okay, now let's see. You have many kind of NCA. For example, you have furniture, you have motor vehicle. Okay, and can you combine their depreciation together? For example, this is 100, this is 200. Can you combine into one, become 300? Then you write depreciation alone? Answer is no, don't. Okay. For the same category of NCA, you can combine their depreciation. I give you an example. Let's say you have a lot of motor vehicles. You have a lot of motor vehicles. You have motor vehicle A, you have motor vehicle B, you have motor vehicle C. For each of these motor vehicle, you calculate their respective depreciation. For each of these motor vehicle, you calculate their respective depreciation. Let's say here is 100, here is 100, here is 100. Can you combine all their depreciation amount? Answer is yes, because it belongs to the same category of NCA. Okay, in this case, you can combine. But when it comes to different categories of NCA, you cannot combine. You must show separately. Okay, you must show them separately. Keep them separate. Something like this. Okay, so that's how you show. You must have the full term. Okay, depreciation of furniture, depreciation of motor vehicle, depreciation of building, depreciation of fixtures and fittings, depreciation of office equipment. Okay, so yeah, that's how you show in the income statement for depreciation. Take note, yeah, what you show here is depreciation for this year only. You are not showing accumulated depreciation. Okay, don't get confused between depreciation and accumulated depreciation. Accumulated means gathered together. Depreciation, the single word depreciation alone means that particular year's depreciation. Get what I mean? Okay, so make sure you don't show accumulated depreciation here. Okay, now how about showing NCA in your SOFP? Remember SOFP? You learn it in part 2, the balance sheet. Firstly, you have all the assets on top. Begin with NCA, then CA. Next session, you have the capital section, then NCL and CL. Remember, you learn it in part 2. Okay, After you have learned depreciation, now you are going to learn how you should show the NCA in the SOFP more accurately. Here you write SOFP slash balance sheets means the same as statement of financial position. Firstly, you write the name of the NCA first. Write the name of the NCA first. And then you are going to find two amounts to be shown here. XXX means an amount. XX means an amount. Okay, all those XXX are amounts. Okay, they are all digits. First figure that you should begin with is the cost of the NCA. Okay, let me make a smaller arrow. You notice you don't have to rejoin again because I have bought the Zoom license. Okay, I think it can save some time. First figure is known as the cost. You know what is cost? I introduced it to you at the beginning. Cost means price you paid to buy the NCA. Okay, first figure you show here is the cost. Second figure you should show, the ones in green, they are accumulated depreciation. You learned that term before? Yes, right. Okay. I explained in very detail accumulated depreciation. Okay. Accumulated comes from the word accumulate, which also means gather, collect, okay, collective. Accumulated depreciation you should show here. Okay, so take note of this. Very soon you are going to do some lengthy questions and you are going to practice how to show in the SOFP and what to show in the income statement. Okay, for now you must remember first. Okay, remember and understand first what you should show in the SOFP, what to show in the income statement. These are all very common questions. And number that you should show at the rightmost. Okay, so that means you take the cost minus the accumulated depreciation. The result that you get, you show it at the rightmost, the figure. Okay, after you have minus, you show the figure at to the rightmost, which represent net book value, NBV. Okay, net book value equals to cost minus accumulated depreciation. Yeah, so it will take you some time to get used to it if it's the first time you are seeing this topic. But for those who have been this topic with your school teacher, then I think it would make you more familiar now. Okay, it will make you more familiar now. Okay, now let's see some questions. Let's see some questions. Not sure if you have these two questions on this page or not. For some of you, you should have it here. Okay, now I would like all of you to try these two questions. If you don't have these two questions on this page, you take a screenshot of this page, okay? Because recently I updated all the handouts, okay? Okay, now you begin, you solve these two questions, then you tell me your choice, then I discuss with you. I give you 4 minutes time, okay, 4 minutes time. You may begin. Once decided, tell me your choice in the box there. Okay, about 2 minutes left. Okay, 1.5 minutes left. 4 of you have answered. Okay, 1 minute left. Okay, Clement, Sidaf, hurry up. Okay, let's see. Okay, let's see. First question. What was the charge for depreciation for the year ended 31st October 20-8? Okay, don't ask me why 20-8. That's the year written here. Okay, and this is the year end, right? It says year ended. This is the year end. Beginning of the year is November 1st, 20-7. Okay, Halima's financial year ends on this day. Depreciates using reducing balance method, use 20%. On 1st November 20-6, she bought the motor vehicle for 14,200. Okay, what is this known as? This is known as cost. You have to see carefully which year's depreciation you are calculating. Okay, remember there are two formulas for reducing balance method, right? So you have to understand here, are you calculating depreciation for the first year, second year, or third year, or any other years? See carefully. When did you buy it? You bought it on 1st November 20-6. Until the year end, it would be 31st October 20-7. Are you looking for this year's depreciation? Answer is no. This is the first year. Okay, so dates are very important in this accounting subject. Okay, and the question is actually asking from you the depreciation for the second year. The question is asking from you depreciation for the second year. That's the trick for this question. Can see carefully, right? Okay, once you have written the timeline, then you can understand you are looking for the second year's depreciation. So first year is what? First year's depreciation is taking this times the percentage. This is first year. Because in order to calculate the second year, you must calculate the first year first, right? 2840. B is not the answer. B is not the answer. Okay. Now, second year's depreciation, 14200 minus accumulated depreciation. Then you times the percentage. Consistent with the formula, right? This is the formula for second year onward, right? 14200 minus 2840 times 20%. Answer is A. Okay, most of you did it correctly. Well done. Answer is A. Okay, now question 4. Why should we depreciate? Why should we depreciate NCA? Earlier, I keep talking about matching principle, right? You want to match incomes against expenses. It is consistent with the B. Answer is B. Okay, answer is B. And A is something that I've not mentioned before. I will teach you this in part 17. Okay, of course not here. C is not relevant. Okay, I've never mentioned this. Okay, C is not relevant. D is about prudence, but this is wrong. This is a wrong description of prudence. We should try to understate for it for the year. Okay, the not here is wrong. They should not have the word wrong here. Okay, they should not have the word not here. Yeah. Okay. Next page. Next page is your homework. These 4 questions is your homework. Once again, I'm not too sure you have this page or not. Okay, but I will send this in the email. Okay, I will send this page to you in the email. Okay, to everyone. Not sure any of you have this page. Okay, 4, 8, 11, and 14. These 4 MCQ. These 4 are your homework. I will attach it in the email. And then now let's see other questions. Let me put here homework. Okay, question 4, question 8, question 11, question 14. Okay, if you think that you have issues in this subject right now, better to do corrective actions right now, okay? Because many students, when it is near the exam, they may want to decide whether to drop the elective subjects or not because they don't have time to prepare. Okay, so you don't want to be in that situation. Better to try to catch up, okay, at now as fast as possible to avoid having to make that decision whether to drop the subject or not in the future. Okay, because I've seen many students trying to make that decision because they say they don't have time to prepare. Reason is actually not that. Reason is they prepare it too late. Okay, they prepare it too late. Okay, now this page 114, this page 114, I give you 20 seconds. Look at this question 2. You tell me your choice. It's very simple. Okay, tell me your choice in the chat box. Question 2 on page 114. Okay, I see 2 correct answers from 2 of you. Okay, look carefully. Yeah, okay, look carefully. Okay, easy questions doesn't mean that you have to do it very fast. Answer is A. Okay, those tools, they're asking you for which NCA should we use revaluation method. Those tools. Okay, now let's see page 115, page 115, question 34. This is your homework also. This is more challenging. This is a very challenging MCQ. Okay, but you attempt first. Okay, attempt first. I can give you the hint as to how you solve this. There are 2 methods to solve this. First method is through using algebra method. Okay, where unknowns are involved. Unknowns are involved. You regard this as the unknown. Okay, regard this as the unknown. Then you form a formula. Then keep doing the derivation. Then finally you find that unknown. Okay, this is one method. You read the question yourself, then you would know. Okay, if your math is very good, then you understand what I'm talking about. Okay, if you have read the question. This is the first method you can use to solve it. Second method you can use to solve it is trying the numbers here one by one. Try one by one. Okay, what does it mean? Look at the question yourself, then you will understand. Okay, here is not asking you to find the depreciation. Instead, they want you to find the cost. They want you to find the purchase price of the machine. Okay, they want you to find the cost. So it requires some working backwards. You have to work backwards to find the cost. Okay, so this one, try. Okay, good question. And then on page number 117, on page number 117, on page number 117, this is also your homework. You try the B1 and B2. I'll discuss this next week. Okay, all these are calculations, okay? All these are calculations that I taught you today. And then, okay, so that's it. And next week, I'm going to discuss all these questions and then we move on to other parts of depreciation. And you are going to learn what are the double entries when you charge depreciation. Okay, so this is the main thing for the next lesson. And then we will also do some lengthy questions. Those on page number 112. Those on page number 112. Okay, a lot of paragraphs here. Okay, so have a nice day, everyone. Try to go through whatever we have mentioned today to get familiar with the contents. Okay, have a nice day, everyone. Good night, everyone. Bye-bye. Okay, welcome everyone. Have a nice day.